Hey guys, in this video I'm going to show you exactly how to use the power of 3 and how powerful this tool is to identify manipulation in the market. So take a look at my chart. First thing we need to do is identify accumulation in the market. What is accumulation? It's sideways movement in the market. So it look like this. And I'm going to make this green for accumulation. And we have to understand what's going on in the accumulation phase. We have resting liquidity above and resting liquidity below. We call this sell stops and buy stops. So above we have buy stops and below we have sell stops. Then the next phase is the manipulation phase. This is when we expect price to either sweep the buy stops or the sell stops. So in this case, price then sweeps sell stops. Now, before we even get to the manipulation phase, we have to have a draw of liquidity. Where is price drawing to? For this scenario, this is our draw of liquidity, and it is buy side liquidity. Imagine there was resting buy side liquidity at this blue line. It could be a singular high, relative equal highs, anything that identifies where resting liquidity would be resting at. Okay, so once we've identified the draw of liquidity, we have identified the accumulation, then we have the manipulation phase. Price will then hunt those sell stops. We'll make this red. There's our manipulation. We take out the sell stops in the market to then distribute, which is the third phase, to our draw of liquidity. And I'm gonna make that blue. There's the distribution phase, which is phase 3, which will then hunt that draw of liquidity, those relative equal highs, that's sitting there at buy side liquidity. That is how you use the power 3. Now I'm going to show you on a live chart what it looks like. So here we have a buy side delivery. We then have accumulation. There's our accumulation. I'll make that green. We have resting buy stops and we have resting sell stops. Where is our sell side liquidity? Down below here at the singular low. We don't have clean, smooth, relative equal low, so we're using that singular low. We have our accumulation phase, and then we have a buy side delivery, which is our manipulation phase. Price then takes out those buy stops to then reverse, which this first price leg here identifies as a change in state of delivery that confirms the reversal to then hunt for that sell side liquidity. How do we confirm that this is a change in state of delivery? We have to use that in our distribution phase to confirm that we are reversing. We go to the 5-minute. Here you can see that bullish order block, these down close candles. We then take out the high to then displace below that order block. Below that low of that order block is our change in state of delivery. We then have to identify a premium array for our entry. So go to the 1-minute, or you can use the 5-minute. There is a sell side imbalance, buy side insufficiency. It's a bearish fair value gap. I'll annotate that. There it is, which we call a SIBI, which stands for sell side imbalance, buy side insufficiency. Price will then retrace into that SIBI to then continue this distribution phase to our sell side liquidity. That premium array would be our entry with your stop above that high of that candle, and then you would continue to let that play out all the way to that sell side liquidity. And that is how you use power of 3 in your trading strategy, by using ICT concepts to find that model.